Hi everyone. In this video I want to explain the interest rate set by the Bank of England, which we'll call the base rate. It's important because it's the primary driver of all interest rates in the UK, including those of the government. Now, the Bank of England actually plays a number of important roles in financial markets in the UK economy, one of which is providing banking services to big high street banks. These services include holding money for them and paying interest on it, as well as lending money to them and charging interest on that. The base rate is the interest rate that the Bank of England uses for these purposes. On our channel page you can follow the link to see the latest base rate, so let's go there now. We can see the rate is 5.25% today. However, you'll notice that the page says current official bank rate rather than base rate. It turns out that the base rate is called the bank rate by the Bank of England, and it's often reported on the news simply as the interest rate. However, like many professional investors and institutions do, we'll call it the base rate to avoid any confusion in the future over which bank or interest rates we're talking about. There is only one base rate. We can see from the graph that the base rate has increased steadily from close to zero at the end of 2021. And like the phrase, a rising tide lifts all boats, a rising base rate has lifted all interest rates, including those of the government, as we saw in our last video. So why is that? Well, for two main reasons. Firstly, because high street banks have to pay this rate on money they borrow, they will adjust accordingly the interest rates on all of their products, like business loans and mortgages, to ensure they make a profit. Secondly, interest rates for different borrowers, including the government, have to follow suit and adjust to be competitive. If their interest rates aren't competitive, then they won't attract the money they need. Now, you may have noticed in the graph that the base rate doesn't move around smoothly. It actually moves in steps over time. This is because it's set by a group at the Bank of England that meets only 8 times a year, and the rate stays fixed between meetings. The primary reason for the base rate to be changed is so that the Bank of England can control inflation, which is another one of their important roles. The recent increase in inflation is exactly the reason for the increases we've seen in the base rate. So to summarise, the base rate is the primary driver for all interest rates in the UK. This is because it sets the interest rate at which big high street banks can borrow money from the Bank of England. This in turn affects the interest rates on all of their products. Additionally, due to competition for money, the base rate strongly influences the interest rates that we can earn lending money to the government over all periods of time. Thanks for listening.